Welcome to our weekly market analysis. This analysis for the weekend of July 12th, 2025. Well, this week we're gonna review what was the FOMC minutes, which came out on Wednesday, what the Fed is thinking, the members are thinking, and also this coming week, well, there's big numbers. Tuesday and Wednesday, we have the inflation numbers, the CPI and PPI. Also, again, tariffs are back. We talked about it last week that July 9th was supposed to be the date, and now we pushed it back to August 1st, not before announcing the 35% tariffs on Canada and then Europe and Mexico, the 30%, and then 50% on copper. So there have been a lot of activities, and the saga continues. Another thing you want to pay attention, now there are some big earnings. The earnings season is starting this coming week, which we need to pay attention to in our trade of the week. We talked about earnings such as like Netflix and Taiwan Semiconductors, but also some banks. So we'll review that. But also in trade of the week, a few weeks ago, actually end of May, we talked about the seasonality. We offered a candidate for the seasonality. I thought it would be good to go back and look at it after 5 weeks. Where do we stand? So, having said that, let's talk about the economy. Of course, last week the big thing was the FOMC minutes. It came out again last Wednesday, and that was for the June 17th and 18th, the FOMC committee, that what they decided, and it looks like they are semi-positive. They are talking about that unemployment is still low. Inflation is, although somewhat elevated, but the concern over tariffs are more manageable, so it has eased. There's a little less uncertainty, but still there is uncertainty. So the most participants, they still think that rate cuts are due later this year. So again, they're watching, and I think that's why the CPI is important. Again, our unemployment is at 4.1%. As far as this coming week, as I mentioned, one thing you want to definitely pay attention to is our the this oh, actually, this is from last week. I just mentioned the FOMC minutes, so we just discussed it. So it was from Wednesday. This coming week, our calendar shows that we have the CPI and core CPI on Tuesday, and the expectation for the CPI and core CPI is 0.3%. And also on Wednesday, we have the PPI, which is I valued even more importantly, is the producer's price index, and that the actual core is expected to be 0.2% month over month, and the PPI itself is 0.3%. Also on Thursday, we have the retail numbers, which we like to, again, pay attention to that. We see that the spread is still pretty positive, especially with the 2-year and 10-year. And again, the long end is 100 basis point difference. So not much has changed since last week. So let's see what kind of a week did we have. Well, the Dow was down 1%, but really NASDAQ and S&P, they were pretty flat. So what we see, the Dow still hasn't hit its January 30th high, and still only down 1% from that high. Um, July 10th, well, we hit the all-time high actually on which was a Thursday, and we're only down after Fridays, only down 0.33% on S&P and only 0.22% in NASDAQ. Gold was up 1%. Copper had a big move, especially after the tariffs. All the precious metals are been moving up, and including palladium, platinum, silver, which we will discuss. Crude oil also was up 2%. So as a whole, the market, general market was down 0.37%. And the only big significant mover was 1.2% in small cap growth. So also have to remember the taxes, the more you're absorbing, you see that movement in the sectors because of the tax bill, which brings us to see where we stand. And we see Dow Jones Industrial again. All the indices are nicely above their 20-day and 50-day moving averages, and we see the same thing in S&P. We see the Nasdaq. One thing you notice is these are like almost like a bull flag. So we might go back and forth between this zone, and then we might have another move. The same thing on S&P you can see. So we might come down to, let's say, 6,200. The same. So we see these are very much, including Wilshire 5000, look like a bull flag. This is the flag, and this is the pole, and this is our flag. We see the yields. Well, they broke above their 50-day moving average. We had a doji came back and bounced off its 20-day moving average. Again, after what we saw with the Fed minutes after the tariffs, we have again the concerns and the bonds and the dollar with the yields going up. You see that the relationships, we did have a little movement on the dollar, and then the commodities had a move again. A lot of metals and also crude oil. They had a nice move as far as gold had a nice bounce, silver had a nice bounce. And then the VIX has been really basing, as you can see. When we look at the sectors, well, we still have strength in discretionaries. Communications had come down, but it's right touching its 20-day moving average. Technology still strong. Look at again a big pull here. Industrial and basic material. The industrial moved nicely, and then they have favorable with the tax bills treatment, and then we have basic material. We have energy, another benefactor of the tax bill. And then we see the staples actually broke below their 20 and 50-day moving average. Healthcare is bouncing up right on this 20-day moving average. The utilities also really consolidating, but they are above the 20 and 50-day, which is a positive trend. Financials, after a really nice week, they retraced. They're still above their 20 and 50. Again, we'll want to pay attention next 2 weeks. There will be earnings weeks for the financials. Globally, again, generally, majority of the markets are above their 20 and 50-day moving average. You see, we had a little breakdown on India fund, but other than that, and also in Japan. One thing I would, and we will discuss that as far as one of the markets which they behaved negatively um, on Friday, actually Thursday, and then also Friday was a big 50% tariffs on Brazil, which is a big partner of the United States. And we see where did we go? After breaking below 20, we are right on the 50-day moving average. We will discuss it a little more in our trade of the week. So as far as the sentiment goes, we're still in a positive, relatively positive. The bulls are above the average. The also, on the other hand, the bears are above the average. So there's a lot of indecision. Although we see this positiveness, well, this is really completely neutralizing each other. So there's a lot of uncertainty. On the other hand, the CNN fear and greed still on that extreme greed, although it's like bordering greed and extreme greed at 75. Now we have moved on our Citigroup into that euphoria zone at 0.45. So when we look at the charts, as I mentioned, even after Friday, we are still nicely that the cash, S&P cash, is above its 8-day and 21-day and 50-day. So we're still in a positive. We might, again, what we like to see is if we do retrace, we like to come and touch the 8 day. The worst case is we like to come and touch the 21 day and bounce back. So there's a little, you can see we've been consolidating right around this area for past week. But we've had this nice upslope in the 21-day moving average. The other thing is we see that 62.72 on S&P on S&P futures. We see that has been a support. So when we look at we were looking at the double top. Well, now we are hugging that area. So the good news, if we break above that, and we could continue up to even 6,600. So basically, this is the zone. So we would like to see that this area hold. As far as what we're looking at from the Bollinger Bands, again, we are nicely above 18-day moving average. We are embedded. MACD is pretty flat, so but there's still strength. When we look at NASDAQ, the similar story. It's more flat, but we are embedded above the 18-day moving average. So we see that there's still a strength. Um, Again, we've seen how Nvidia has done. We will talk about that in our trade of the week. So that has been a big part of this move. And basically, we have again a little flattening here. So we do have the support at 18-day moving average. When we look at the Russell, after a nice move, we see we had a sell-off, and we noticed that especially small cap growth, they had for the week they were down, but we still embedded, and MACD is still positive. When we look at the Dow, actually we're down a little bit for the week, as you can see, but we are still embedded, and MACD is still positive. Now, when we look at the transportation, after really nice move, we see we've been hitting that resistance, which just goes back for almost a year, and we are close to that actually. Touch the Bollinger Band. Again, similar story. There's still strength in transportation embedded, and MACD is positive. VIX is really flat line here. You see, look at this MACD. We are embedded on the downside, so it doesn't show a lot of strength. But the Bollinger Bands have really been coiling and really narrowed. Um, the yields, well, after going down, touching the lower edge of the Bollinger Band and being embedded, we went to oversold, and now we have moved up. Now we are overbought. We are above the 18 and 100-day moving average. So, and MACD is a tiny bit positive, but our hope is maybe after hitting the upper edge of Bollinger, we would have a little sell-off. But once we are above the 18 and 100-day moving average, then the trend is up, so which doesn't bode well. On the other hand, when we look at the 10-year notes, we just broke below the 100-day. It is 1 day, and on the other hand, we are oversold, although MACD is uh, trending down, and we could not break above that 18-day moving average. When we look at weekly, we see that we have the momentum is actually down. We had the oversold. It did have a little bounce on the weekly, but I want to look at the indecision. Even after the Fed meetings, you see this Bollinger Band is really narrowing. Look at the width, it's coming down. So that's coiling. So we are waiting to have a catalyst. So we are really in a very narrow area. But not the when we look at the 30-year bonds, the long term, long end is more negative than 10-year. Again, we are momentum still down. We are not oversold. We touched the Bollinger Band, but we are under 18 and 100-day moving average. MACD is negative. And then when we look at the dollar, on the other hand, dollar had a nice bounce after that Bollinger Band. We just breaking above the 18-day moving average. We were oversold. We talked about the last week. Again, this about 100 area, 99.7 is a major. But if we can consolidate here, we should be okay. You know, the Again, I think there's some politics involved in weakening the dollar with the tariffs and other things. It's helping with the imports, and with the exports, I mean, and affecting the imports. We'll see how far this will go. Between the 90 and 100, it should be a comfortable zone. But again, we have talked about it. Once we broke this, um, it would be difficult to go back above that, at least in the short run. As far as the euro is the opposite. We are actually right on the support on that 18-day moving average. Although the momentum has come down, we are still above 50 on stochastic. MACD has crossed, so they have their own issues in euro. When we look at gold, well, we are looking at really coiling in gold. We are challenging that 18-day moving average, but we actually moved from RSI point, I mean, a stochastic point of view, we moved above the 50. So momentum is turning positive. MACD is about to turn positive. So we did have a nice Friday. We most likely consolidate here and we might be positive, especially again, the tariffs and the Middle East. And also we will discuss the Bitcoin as a story. Well, that was gold, but look what has happened to what we see is silver. A big breakout, although we are outside the Bollinger Band, but I want to pay attention to the width of the Bollinger Band. We were coiling and discussed that, and then momentum has turned up, although we are overbought and we are outside the Bollinger Band, but this will be more of a consolidation. This looks like, again, we had this bull flag here, a long one, and then we have another bull flag. So that's if we can open up, this could go up nicely from this pole, from this width. So we still got some room to go. Again, we are overbought, but MACD is about, it has crossed actually. Even on a weekly basis, what I want you to see is a very nice, again, this is actually more visible. You see our bull flag here. We just broke out of it. We are now embedded on a weekly basis. So there's a good chance that our Bollinger Bands could open up. And we've discussed silver in the past. I want to even go back monthly, the 15 years on silver. And about a few years ago, we had about 2 or 3 years ago, we discussed silver, how while gold has been hitting all-time highs and continuing, well, silver has not. And silver, this is SLV. The silver itself went to 49.24 on when we look at the futures on SLV, we hit the 48.35 in 2011. Actually, I was on my birthday, July 24th, we hit that all-time high. And what we have, you can see we have gone back, breaking above this high of lower high, but this resistance, which had been highs for the last 14 years before the all-time high, and we have just broken above that. Other thing I want to pay attention, look at this long squeeze on a monthly basis. And right here, you can see I've drawn the line. You see the squeeze fired, and we right above its 20-month moving average or 21-month moving average, and here we are. So we've had this nice move. And we are just touching our one standard deviation. Copper, another big one. Again, more of a tariff story also, but also metals, as I said, platinum, palladium. Look at this big, again, looks like another bull flag. So we see here, if we break above this, then that would be another nice move up. Only thing is we see the divergence. We see that we have momentum still up, but it just shook off the actually actually we shook off the overbought zone. So we could consolidate a little bit here after going outside the Bollinger Band. So, but we are building, I think, a flag here. MACD is positive on a weekly basis. That's what I think I was looking at is we are overbought right now. We went outside Bollinger Band, and you see how on a resistance we just broke above on a weekly basis going back to 2021 and 22 actually, and 21 22 we've hit it in 24, and again beginning of the year, and here we broke out of that on a weekly basis. So pay attention to copper. So we'll see a lot of common story. We see the precious metals and uh, and metals as a whole, and look at the Bitcoin. Last week we were talking about Bitcoin. I mentioned we are coiling. Look at the width. Look at this, what's happening. Bollinger Bands have narrowed, and now we just broke out. Actually, went above the Bollinger. Now the Bollinger Bands are opening, widening. We are embedded. MACD is positive. So I would say this is another bull flag. We can see again that we have that width here. What happens, the difference of the flag, this is the flag, and that could take us, if we wanted to just have a first target, we are at 118, but this target gives us 120 to 121 zone. So let's see if we can hit that. Also, I wanted to look at from the squeeze point of view. Again, I had mentioned it before, we just talked about that coiling. Look at the squeezes that we've had. This fired, and look where we went. Um, Here we've been in a long squeeze, and it just fired in this area. So we've had a really nice move. The question is, how far can we go? As I said, on Bollinger Band, we are outside on 2 standard deviation outside, so we might do a little consolidation, but this is a really good strength. And then, of course, when we look at weekly, again, we can see another, again, flag embedded. MACD is positive, and we just touching the Bollinger Band. We haven't gone outside, so that's all positive. And then on a weekly basis, I want to look at the Bitcoin. And what we see is after touching the negative 2 standard deviation, we see how nicely we've gone. We are in a 1 standard deviation. As I mentioned, we might consolidate here, but the momentum is still up on the Bitcoin. Crude oil, well, after hitting, we had talked about our trade, and then now we've been really seeing that support, the support zone, which goes back, I had it for many, many months. You see how we've just been consolidating. We have been oversold. Right now, we are against the 18-day moving average. MACD is pretty flat. So we are kind of looking at more of a, can we break out of this? So, but also the Bollinger Bands are narrowing, still pretty wide. So we'll see what happens. You can see again, we narrowed here, and let's see what happened next. So right now we're still oversold. So we could have a movement above the 18-day moving average. We shall see on the short run. All right, let's talk about expected move. It was a really non-eventful. You could see again, like S&P was pretty flat, as you can see right in the middle, no event. And NASDAQ, the same thing right in the middle, even after hitting all-time high. And the same thing with Russell, right in the middle, not eventful. Dow was down 1%, so we went and close to the lower edge of expected move. And then we look at the bonds. Well, they went right outside. It's not by much, but the lower edge of expected move. We had gold nicely touched its lower edge and bounced back, so it behaved well. It's the silver. I mean, look at this big move, and it's a 52 weeks high, and as I said, it's like almost after hitting in 2011. Since then, this is like 13-year high. And then we've had the financials. Again, we just went outside the lower edge of expected move. We want to watch for the market, so we'll discuss in trade of the week. And the energy also, as I mentioned, there was some favorable tax in the tax bill from favorable treatments, but also crude oil, all hand in hand. We just hit the upper edge of expected move. We went a little bit outside. Crude oil had a positive week. And of course, Bitcoin went outside its expected move, a nice move. Thank you very much. We move on to our trade of the week.